Today we are going to talk about how to record a journal entry. Okay, so I have for you here a basic transaction that we would see in our book. So for instance, Sal's Repairs, so that's the name of the company, purchases equipment for $500 cash. Okay, so that would be the transaction that we would see. I have a 5-step process that I normally go through so that I can understand exactly where and how to make the journal entry. Okay? The first step is, what accounts are we dealing with? What that means is, what specific account are we talking about? Okay? Is it cash? Is it accounts receivable? Is it a certain type of expense? Knowing what accounts we're dealing with. Okay? So if we take our example again and we say Sal purchased equipment for $500 cash, our accounts are going to be equipment and cash. Okay? So those are the two accounts we're dealing with. The second question is, what types of accounts are they? So now we've identified equipment and we've identified cash. Now we have to decide what type of account. Is it an asset? Is it a liability? Is it an equity account? Okay, so what type are we dealing with here? In this case, equipment gives us some type of future value. Okay, so it's valuable to the company. That is an asset. The same goes for cash. The cash has a value. It contributes to our business in a positive way. So both of these are asset accounts. Okay? Step 3, which side increases? So is this account increasing or decreasing? We know equipment is an asset account. Okay? We're bringing in equipment to our business, which means cash is leaving, right? We have to pay with something. So equipment comes into our business, so that would increase that account. Now cash, since we're paying with cash, it's leaving our business. So the cash account would decrease. Okay? Then we have to say, okay, well, which side does that affect? The debit or the credit side? Well, we know for an asset account that the debit side increases, okay, and the credit side decreases. And a good area for you to look at in your book, so Wild 4th edition, is going to be page 58. There's a nice equation in there that breaks down assets, liabilities, and equity by debits and credits, shows you which side increases and decreases. And I'll talk about that in another video. But referring to that, we know which side is affected. So for equipment, since we're bringing equipment in and we know that it's an asset that increases, we are going to debit equipment. Okay? Cash is also an asset, but we know that that is decreasing. So an asset decreases on the credit side. So we are going to credit cash. Okay? The last thing is for how much. So we have to decide, okay, well, out of this transaction, how much is being recorded? This one's pretty straightforward. So we purchased equipment for $500 cash. $500 is what we're going to record. Okay? So when we're looking at this, okay, and we're now trying to record it, so I'm going to erase all of these steps here. Okay? When we look at this and are now trying to record it, okay, the entry will be always the debit first. Okay, so the debit in this case is equipment. Okay, so equipment, and we should label this debit and credit. Okay, so equipment will be debited $500, and cash, which we indent, will be credited $500. Okay? Now, even though we have the entry up here, so what the transaction is, we still need to put a note at the bottom. So purchased, and I'll abbreviate, purchased equipment with cash. Okay? So as you go through trying to figure out how to create journal entries and where everything goes, keep that in mind, okay, that looking at your book, page 58 is good, but also understand that you won't always have the exact transaction information. So just make sure that when you're going through this that you absolutely record that note for your journal entry.